I'm Sarah Borkson-Keeter with REIT.com, and I'm here with Brad Case, NAREIT Senior Vice President for Research and Industry Information, to discuss the FTSE NAREIT PureProperty Index Series. So Brad, looking at returns for March, what were your main trends that you were seeing?
Yeah, you know, the important thing to understand is that when we're looking at the PureProperty Index Series, it's a little bit different from a REIT index in that it gives us a way of looking at not just the returns that shareholders get from owning shares in REITs, but also the returns that the REITs get from owning the properties that they own. The main difference is that the REITs borrow some of the money that they use to invest in properties. And that use of leverage generally increases their returns, magnifies their returns. And what we're doing is we're correcting for the capital structure of the REIT so that we can look through the REIT and see what its returns were from properties. So what we saw during March was a very strong rebound in property values, as well as the total returns that REITs were getting from ownership of properties. And of course, that's very relevant to many investors, especially institutional investors, who may own properties and also own shares in REITs and want to understand whether the performance at the property level was stronger in their REIT-owned properties or in their properties that are owned other than through REITs.
So Brad, what did the PureProperty returns tell you about March?
Well, March was a very strong month, and so what we saw that the values of REIT-owned properties nationwide increased by about 5.6% during the month of March. So a very strong recovery in property markets. For the quarter as a whole, you remember that January was a very poor month. February was kind of sideways, and March was strong. So for the quarter as a whole, we saw property values increase by 3.3%. Again, a very strong performance. What you have to keep in mind is that when we're looking at other measures of property values, those other measures generally coming from information that is lagged quite a bit behind the forces that drove property values up or down. So what we've seen in other measures of property values is a decline during February and March. It's important to keep in mind that in the REIT market we saw that decline half a year ago or a year ago. So what we're seeing in REITs is a recovery after a period of decline. Other measures from the private part of the real estate market are just now going into their decline. So there's going to be a disconnect between what we see through the PureProperty Index in terms of current movements and what we see through other indexes that are measuring past movements.
And what did the PureProperty data show you about different segments?
Yes, one of the things that's really valuable about the PureProperty Index is it enables us to look at segments of the market defined not just by property type, but also by region of the country. So during March, for example, we saw that the East region and the West region of the country performed more strongly than the Midwest or the South. Not by a lot, but property values in the East and the West were up by 5.9%, a little bit lower than that for the Midwest and the South. During the first quarter as a whole, however, the South region was the strongest performer. Property values in the South during the first quarter were up by more than 6%, whereas it was about half that much for the other three regions of the country. And you can actually look at segments of the market defined by both property type and region. So, for example, we saw during March that apartment properties performed better in the East region than in the Midwest or the West or the South. Office properties did better in the South region than they did in the East or the Midwest or the West. In fact, during the first quarter of the year as a whole, there was only one segment of the market that saw a decline in property values, and that was office properties in the Midwestern region of the country. They were down, the property values were down by just 0.5%. Of course, they generated additional income of more than 1%, so total returns for office properties in the Midwest were up by 1.1%. I'm sorry, up by 0.6%, and that was the weakest performer of the entire country during the first quarter of the year. This is the kind of insight that we can get from the PureProperty Index that we can't get from other indices.
All right, well thanks very much, Brad.
It's a pleasure.
And for more information on the PureProperty Index and other REIT matters, be sure to visit REIT.com.